Afternoon, grand rising to all of you. And I think once our presentation come up, we'll go ahead and get started. Glynis will definitely open up with the introduction of who we are, what we do, and why we're here sharing all of this information with you guys. Going with just like what you said about perfect going into health insurance, and then now we're going to be talking about life insurance, especially in our community where we kind of run away from that. We run away from talking about life insurance. We run away from talking about the thing that is so important to us. We need to leave GoFundMe's in 2020. We need to talk about income protection with our families and making sure that we're leaving a legacy. So go ahead and get started on Glynis.
Okay. Hi, everyone. Thank you very much. I'm so glad to be here today. This is a wonderful opportunity to share information with our community. And my name is Glynis Mcbean, and I'm a district leader with Primerica Financial Services. Jessica Moss is a regional leader with Primerica Financial Services. And our mission, our passion is to educate families, educate people on the importance of financial services and the things that we offer. We don't offer only life insurance, but today we wanted to focus on life insurance. And one of the reasons I wanted to do that was because a few weeks ago, someone contacted me because her fiance's grandmother passed away earlier this year because of COVID, and they did not have insurance. They had to pass a hat around, and they realized that her mother didn't have insurance, and some of the siblings didn't have insurance. And so I have an appointment coming up in the future to meet with the family to determine who has a need for life insurance. Our company we offer savings plans. We teach people how to save money for emergencies, for retirement, for college. We also partner with other companies that do home insurance, car insurance, and a lot of other financial services. But today, we want to focus on life insurance. So next slide. Okay, so Jessica will take that.
Yes. So thank you so much, Glynis, for that introduction. And even now, what we're talking about, especially during a time where things are all over the place. As you're looking at this picture, ask yourself, is my house built that way? Just like when we buy a house, we don't buy a house and we start at the roof. We have to start at the foundation. And the foundation for us, it is life insurance, right? We have to protect our income. Just like Glynis mentioned, we show people how to save up for an emergency, right? Do you have a budget? Do you have a will? See, we need to make sure that we are planning for our financial futures, not just having a retirement plan, but do you know exactly how much money you need to retire? When you want to talk about getting out of debt, a lot of us tell ourselves, oh, I'm going to be in debt forever. So we want to give you a game plan and say, hey, Glynis, you're going to be out of debt in 5 years if you follow this plan, right? You want to build your house on solid rock so that it's not on quicksand. God forbid another pandemic happens, you're not caught up in this mess, right? An emergency fund, 6 to 12 months set aside. Like I said, getting a game plan to get out of debt, having a retirement plan, not just saving for retirement, but how many of us can actually say, I know exactly how much money I need to retire? If these are questions that you don't have the answers to, then that's what Glynis and I do. But first, we're going to keep ourselves on that foundation of life insurance. And of course, your goals and dreams. Listen, we don't want to just live to pay bills and die, right? But some of us, we start at the goals and dreams, and then the rest of our levels in our houses are all over the place. So God forbid we, the breadwinner, pass away. Now we're in this turmoil of robbing Paul to pay Peter to pay John and Mary, and we can no longer do that, especially going into 2021.
Next. Yes. So we just wanted to talk about 6 important uses for life insurance. I remember years ago, I was working at a company, and there was a a co-worker whose mother passed away. He was of a different persuasion, and he got he inherited $500,000 worth of life insurance and $250,000 worth in investments. And that is a way in which some other communities and other cultures and other people, that's how they build wealth. That's how they use life insurance to build wealth for the family. So, one of the first things that we can use life insurance for is for paying off debts. Many people have student loans, they have mortgages, they might have purchased a car, they might have gone on vacation and have a debt, and they might have borrowed money from someone and they owe someone and they have a debt. So, life insurance proceeds can be used for that. In addition to obviously for funeral expenses, I mean, unless you have a separate account where you save money specifically for a funeral, the life insurance proceeds will go towards paying that. And then your family doesn't have to pass a hat around to get people to give you money to bury someone. Um, Another important use is for mortgage. There are some policies that are used for paying off a mortgage. Um, we can also use life insurance proceeds for education. For example, a family might have had a young man might have passed away and had two young children, and the money could be used for education. We talk about the good book says a wise man leaveth an inheritance for his children's children. So it's a good thing to keep in mind that life insurance could be used as a legacy for a family. And it's also used to replace income from someone who does not come home that night. So those are six of the most important uses for life insurance.
Next. And here, as we're talking, think of life insurance as, like Glynis was showing those six uses, is definitely replacing the income. See, our mindset, especially for us, it has to change. It has to change of, oh, is what if I die? But it's not for you, right? Life insurance really should be love insurance, right? Because it's for those that you leave behind. If you are a breadwinner in that household, right? As the picture at the top is showing, you have a mom and dad, they have a couple of children, right? Those two incomes are coming into the household. The incomes are there to take care of the mortgage, right? Or rent, your bills, your savings, taxes, debts, savings accounts. That money is going all over the place. But what if that person passed away? And I'm sure many of you that are on here right now have experienced, whether personally or know someone that has gone through a financial turmoil because that person died without life insurance. So as you can see in the second picture, when dad is gone, that house is no longer leveled, right? It's unstable. And what happened is mom is now struggling to pay the bills. See, I was taught, at a young age, that is not only my job to take care of my family while I'm living, but also if and when I pass on. See, we can't bring back our loved ones, but we can replace their income. As you can see in the last picture, right? It has life insurance. We are there to protect. So if you're making 30,000 a year, you should have at least $300,000 worth of life insurance, because if you invested 10% of that 300,000, that's 30,000 back into the household. So that's what we're talking about, income protection, making sure that you are your biggest asset and that you are protecting your family. God forbid something happens to you. Next.
Yes. So here we see some of the factors that affect the cost of life insurance. Of course, the most obvious is your health, because we know that if you are sick, the likelihood of an insurance company writing a policy on you is zero. If you have cancer, you can't just suddenly appear to a life insurance company and say, hey, could you write me a policy? Because I know I'm going to die in 6 months. So it's important that you try to get a policy when you're in good health. Or even if you have a chronic condition, such as diabetes or anything like that, it's still possible to get a policy, but the premium might be a little higher. But you can still get a policy and protect your family's income, your age. The younger you are when you get a policy, the lower the premium. So it's not a good idea to wait until you're 50 or 65 and get a policy. However, if you don't have a policy, it's still a good idea, but the cost of the premium would be affected. Whether you smoke, smoking is a big factor in the cost of life insurance because it costs almost double or close to double of someone who does not smoke. So it's not a good idea to try and get a policy when you're smoking. However, it's still, you should get it just to protect your family. Where you live is another factor. And that is, just like with car insurance, where you live affects the cost of the premium because if you have a garage or if you live in a gated community versus parking on the street, and in certain areas, the premium would be higher. So the amount of coverage as well affects the cost. If, for example, if you want a policy for 500,000 as opposed to a policy with a face value of 250,000, of course, the cost of the premium would be higher. And then the duration of the policy, the older you are when you get it, the less of a duration the policy would be. So just wanted to share some of those factors that affect the cost of life insurance. Next.
And with those factors, that Glynis mentioned, you don't want to wait until that situation happens, right? I mean, we are always taught, like me, I'm a single person without children. A lot of us have in our mind, well, I don't need life insurance because I don't have a family. I may not have a family like a husband and children, but I do still have a mom. I do still have a sister, right? I do still have a dad where if something happens to me, I don't want them to be scrambling to get, to save up money, right? To pass that hat around. So here it says, listen, if you died today and I attended your funeral, which do you think your family would most want? Would they want you to just donate that $100 to GoFundMe? Because most GoFundMes, yes, it can put that person into the ground, but this family still has to live on for the rest of their lives, right? Yes, a condolence card is okay, but unless you're going to give me a $250,000 condolence card, right? It's not going to be enough. Obviously, you can have food, an arrangement of flowers, or how would you like it if someone could bring you a check to that family to cover the funeral expenses or medical bills and college education, or things that we can use to help support and be able to go on for that family, because a lot of us are dealing with a lot of different things right now that we're not sure what to do, right? What kind, and as we continue going on, we're going to talk about the different types of life insurance policies that are out there. But we want to here to just educate you and just give you a little bit of things that maybe you never knew, because a lot of people can be uninformed or misinformed when it comes to life insurance. Because I tell you right now, being a life insurance agent right now and a financial rep, all life insurance policies are not, all life insurance policies is not what we call a blanket slate. Because a lot of us have that idea, well, oh, I have life insurance, I'm okay. But when was the last time you really looked at your policy to really understand, like, wait, is this covered? Am I covered for this? So I just wanted to throw that in there. Next. So how does life works, right? So in the early years, just like Glynis was saying, and what we're sharing with you is that you don't want to wait until you're older. Listen, we don't want you to have life insurance for your entire life, because no matter what age you are, it's going to get expensive. See, in the younger years is when you need life insurance, because you have young children, you have high debt, and usually you have a house or mortgage. We call this the theory of decreasing responsibility. So when you're younger, that's where all of your responsibilities are. You want to have a lot of life insurance because you don't have a lot of money. But that is going to change, right? Because as you get older, your children get grown, right? They move out, at least we all hope they do. They move out, they go start their own families. Usually your debt should be lowered and your mortgage is paid. See, you want to have two game plans. You want to have a game plan if I die too soon, but also if I live too long. See, statistically, if you are 60 right now, you will make it to age 85. You're talking about a 25-year game plan. You don't want all of that money in life insurance. You want to make sure I have money set aside. I want to become financially independent. See, we want to teach people to eliminate their need for life insurance as they get older because it's going to get costly. You're not always going to be healthy, right? You probably wasn't smoking and then you started smoking, right? Or maybe you did stop. But whatever it is, we want to make sure that you have two game plans for yourself so that you're protected all around. Next.
Yeah, so as we continue here, um, we offer there are four ways to protect your family, and one is no coverage, and that is a way of no coverage is coverage, but we know that you won't get any. No one gets money. If anything happens to dad, so to speak, the family is at risk. We know someone whose father died when he was in his 30s. They had a house, they had a car, they lived in a large house, and when the father passed away, the house was the first to go, the car went, and they ended up living, the mother and five children ended up living in a one-bedroom apartment. So that's not something that we want. Um, there's also limited coverage. Group insurance from your job is provides limited coverage. It basically just covers maybe 1 year salary. Then there's mortgage coverage and there's credit coverage. There's also cash value insurance. Now, the cash value insurance, it provides protection, income protection, and it also builds savings, and we'll go into that later, as opposed to term insurance, which only provides protection. So we're going to discuss as we go on how to protect your family. Next.
And also, even though it's not listed, but I know there's another popular one that a lot of people are familiar with, what they call ADD or accidental death insurance. That one we didn't get a chance to list, but just talking about it, they're very cheap policies. You can usually get them at a financial institution like a bank or a CD. Even your job may offer that through the group insurance, but you also have to understand your definition of an accident and their definition of an accident is not the same thing. So a lot of people could get an accidental death policy for $500,000 for like $20 because they're very cheap policies. 9 times out of 10, and being in this field for the last over 10 years, 9 times out of 10, they don't pay. That's just the bottom line. You don't want to get a policy that dictates how you're supposed to die, right? So I just wanted to throw that in there because it was not one of the ones of types of policies listed. But when you have someone that doesn't have anything, right, you have the uncertainty, the fear, and the worry, right, where you're not. I'm meeting a lot of people nowadays who are now open to having that conversation than they were before. But imagine just not having anything. But yet, before we buy an iPhone, right? For those of you who are iPhone users, you're not even going to walk out of that store without putting protection on it. If you get a car, they won't even let you drive off the lot without you confirming that you have car insurance. So why is it that we are the ones walking around here with no protection on ourselves? Because you can always go get another phone, you can always go get another car or iPad or a TV, but you cannot get another you. We are our biggest assets. Our ability to go to work, to bring home money is what we need in the household. Why would we not protect our biggest asset? Your car is not your biggest asset. Your house is not your biggest asset. You are, because at the end of the day, it's you that gets up and go to work every day to get that paycheck to come in every 2 weeks. You want to make sure you're protecting that paycheck. if something happens to you. So here we're showing if you don't have anything, just for a little as $1 or $2 a day, we can put together an entire family program for you to get your family protected depending on what your needs are, which we offer a financial needs analysis, which is complimentary. We don't charge for that because a lot of people don't really know how much they need. Some people could be overinsured or they can be underinsured. Next.
Yeah, so we see here there's group insurance versus Primerica term. In a case of group insurance, excuse me, if you're working at ABC Corporation and they offer you a company policy, you're not in control of that policy. The company owns it. If they want to reduce the level of coverage, they can because it's theirs. It's very limited. It's usually 1 to 2 times your salary, your annual salary, whereas we recommend like at least 5 to 10 times coverage of your annual salary. And also, when you leave that job, it's a term. They offer term, and you're compelled to convert it to whole life, which we'll go into later. It's also the type of policy that does not have terminal illness benefit, which is another thing that we'll go into. With Primerica term policy, you are the owner, and we have one policy for the entire family, and we covered it's now changed. It's now up to age 100. You can get insurance up to age 100, and all of our policies have a terminal illness benefit included. We'll discuss that later. So if you were to make a choice between group insurance on your job and Primerica term, which program gives you better peace of mind? I think that's a no-brainer. So we'll just go to the next slide.
Yes. And adding with the group insurance is, like I said, you don't own it. Why would you want something that you have no control over? There's nothing wrong with having it through your job because if it's included in your benefits, that's awesome. But get something outside of work, something that you can take with you. A prime example is during this pandemic with COVID right now. There are a lot of people, if you become furloughed, if you're on workman's comp, if you're out on maternity leave or sick leave, technically you're not covered under that policy anymore if you passed away, because now you're not getting paid from your job, you're getting paid from the government. If you died during that time, your job does not have to pay for that. Pilot does not have to pay that death claim. So these are reasons why you need to get your own policy outside of your job and really read your policy. Just like with car insurance, most of us haven't looked at our policy since we bought it, right? But when we got into an accident, that's the first thing we're scrambling for. Life insurance is no different. Look and see what those benefits are. Look and see, okay, what is a terminal illness benefit? Do you even know what that is? There's a terminal illness and then there's critical illness. It's 2 different things, right? Yes, we'll cover you if you pass away from one of those, but there are a lot of people who have a terminal illness and they're still living. Does your policy upfront you some portions of your money that you don't have to pay back to take care of while you're living? See, our company does that. Does yours? See, you want to ask and look at these things, and that's what we do to educate people, because there is a lack of knowledge and a lack of education when it comes to life insurance. So here, this is our rule, right? A lot of you have probably already read it as I was talking, but we call it our funny banking rule. So if I was your banker, right, and you came to me and Glynis is sitting down as a client, and I'm going to say to Glynis, hey, Glynis, before, you open up this checking account with my bank, right, ABC Corporation, I'm going to read you my 5 rules. And if you agree with these rules, I would like for you to sign. So the first one says all of your deposits will be zero balance into your account for the first 2 to 3 years. So basically you're donating all of your money to my amazing corporation for the next 2 to 3 years, right? You don't get anything. So I told Glynis the first rule. The second rule is your savings is going to earn about 1 to 3%, right? She's like, I don't know. To be honest, from the first rule, I would have said no. But you know what? I'm still going through all of them, right? So you're going to earn 1 to 3%. Now, if you want to borrow your money, right? If you want to go on this extravagant vacation, you want to send your kids to college, you want to buy a house, you can come to my bank to get your money, but I get to charge you 5 to 8%. Then I can hold that money for at least 6 months before you can receive it. So not only do I can charge you, but now I get to hold it for a certain amount of time. And then listen, your family don't even have to fight or argue about it if something happened to you, because we get to keep all of your money. Glennis, would you please sign here? Now, a lot of you are probably laughing like, I would never sign this letter. This is, what kind of bank is this? Well, believe it or not, this is actually a type of policy that many of you have heard of, or even some of you may actually have. Can you go to the next one? And that's what we call whole life or cash value life insurance. Some of you know it as, maybe, like I said, whole life, universal, variable life. They call it flexible universal, flexible premium. It's just pretty much a bunch of names. But if you have a policy that has a savings built into it, you pretty much sign that letter. See, they didn't sell it to you that way, because if you would have told me for the first 2 to 3 years, you taking all of my money, I wouldn't have signed it in the first place. But that's not what they do. They tell you, or they educate you, and they say, oh, you can use this money to send your kids to college. Oh, you can use this money to buy a house. You can use, they don't even use the word borrow, because why would I want to borrow my own money? That's the first off. I mean, that doesn't even make sense, right? But yet millions and millions of people are here. And again, we're just here to educate you, to really understand, why would I do that? If you taught me this, if you told me this, and knowing that I had another option, why would I take that? See, here, one thing is that is very low coverage, right? Only 150,000 each, but you're paying almost $300 a month. So it's also a higher premium. See, they don't tell you this cash value is a living benefit. This 150,000 is a death benefit. You can't be alive and dead at the same time. So if you don't use that cash value, right, you're borrowing your own money, they are going, all of that money goes back to the insurance company. Like I said, they keep your money. And if you don't believe me, all you got to do is look at a policy. Now, you may not have it, and that's okay. You don't want it, but we read these policies and it's written right there. See, these insurance companies, they don't care about what the agent says. They're going to go by what the policy says. So we teach buy term and invest the difference. See, if I pay for two things, I would expect two, right? I don't know about you ladies, but when I go to the shoe store and I'm buying two shoes in a box, I expect two shoes, not you telling me, well, you only got one, even though you paid for two. So we do buy term, invest the difference, right? It was more, oh, sorry, I'm not done yet. Go back. You get, double the coverage for a lesser cost, which roughly, let's say, is around $123 a month. And then you invest the rest, right? So if you're investing that $175, that turns it to $500,000. That is $1 million legacy we just put together with money that you're already spending. See, who's teaching us about $1 million legacies, right? Generational wealth. Which program would you want if you had the choice? See, sometimes they don't give us the choice, even though it's there, because we are no longer can be uninformed or misinformed or having that lack of education, because now all of you just got it, right? And we're teaching you how to have both. Again, have a game plan if I die too soon, but also if I live too long. Now you could go to the next one.
Okay, so we see here that Primerica versus the industry. In the industry, you might have a policy from ABC insurance company, and what's in the policy? What kind of benefits do you have? Many times it's not clear what kind of benefits you have. But with our type of policy, I'm just going to highlight a few. One of the benefits that we have is the benefit, the family policy. Because what we do is, if you go to a company to have your family insured, and it's a husband, wife, and two children, you will actually end up with 4 policies and have to pay 4 policy fees, annual policy fees. Whereas with Primerica, We have one policy for husband, wife, and up to 9 children for a very, very low premium. All 9 children, you pay one premium for them. You don't pay 9 premiums if you have 9 children, that is. You just pay one premium for your children. The other the other policy is the other clause. There is a no war or terror clause in our policies. And one example of that is when 9/11 happened, it was declared an act, it was a terrorist act, an act of war. And many people did not get paid, where their families did not get paid because there was that specific clause was not in their policies. you know we also have another thing that we offer to the families is we offer something called a freedom accumulation benefit, which is a fab account which we can build into the term policies for as little as $10 a month. It's not a great amount of interest, but for a little $10 you can add that to your premium every month. And if you have an emergency and need to take money out, need to get money, you can just call and ask for the money that's in the FAB account. So that is another benefit of the Primerica policy. I don't know what happened to Jessica. She seems to have dropped off. Next. Oh, I don't know what happened. So, many people know about Dave Ramsey. And here is his philosophy. Whole life insurance is the payday lender of the middle class. Do not fall for it. Get a term policy to protect your family. So, we know that, and also I think Susie Orman, who is financial advisor to many stars, including Oprah Winfrey, this is her policy too. She has a she has a video on YouTube where she talks about this, about not getting a whole life policy because they push it and they say they say, oh, you can use it to invest money, but they don't tell you that when you invest, okay, here she goes. They don't tell you that when you borrow the money, or if you take the cash value out, you don't have a policy anymore. So this is what Dave Ramsey says, and I know a lot of people know. I think he calls it baby steps. Next.
So even with again, things that you can use this for. I mean, this is one of a picture that we just saw, but it says Master P's grandfather left him $10,000 from a life insurance policy, and he turned it into a $250 million, empire. What if he had left him nothing? See, maybe the 10,000. Hey, for some of us, we're like, oh, I got 10,000. I didn't turn it into an empire. No, but what did you do with it? See, the thing when it comes to when we get money is not the fact about how much money we make, but it's about how much money we keep. See, you can make 100,000 a year and spend 105,000. You're still broke, right? So even with life insurance, the reason a lot of us, when we get a lot of money, we don't know what to do with it because one, we don't have a plan, we don't have a coach, and we don't have the financial education. But see, he used it to do something. Now, maybe you won't turn 10,000 to a $250 million empire, but why not invest that money? Why not put it into a retirement plan? Why not put it into an IRA? Why not set it up for your kids' college? Why do you have to borrow money to send your kids to college? But if we were taught about college education at a young age, and I'm saying this from personal experience for someone that went to school and got 2 degrees and I'm paying my loans back, but what I've learned, I'll be out of debt by next year, in the next couple of months, actually. Why? Because I learned the importance of financial education. And I started with life insurance and understanding, man, we need to teach people how to build generational wealth, right? How to become financially independent. Not saying you're trying to profit off the death of someone, because that's not what it's for. But I think they would be a lot happier if they looked down on you and saw that you did something good with the money that they left you, right? And that you didn't just, just wandered it away, Next one. Life insurance is cheaper to buy 10 years too early than 1 minute too late. A lot of us, even I use COVID right now. Some of us were probably as healthy as we are. But did you know that life insurance companies, because you tested positive for COVID, that's a pre-existing condition. They could charge you a higher premium because now you have a pre-existing condition now. Any other health issues that may have come with it, all because of that. All it takes is one time, right? That one party or going to the supermarket. We don't want to wait until it's too late when we could have taken care of it so many years earlier or so much time sooner. Next. Go ahead, Glynis.
Yes, so we like to share with people and teach people that it's easier to pay $30 to $100 a month for a policy than it is to pay or raise $10,000 in a week for a funeral. And we all know how that happens. A lot of people use the GoFundMe system for that. So getting life insurance is one way of preventing, not being able to pass a hat around, as I like to say, and begging people for money, and having people to pay to store the remains, and and it's a stressful time. So if you prepare in advance by getting your insurance policy, it's you have a peace of mind that you're taking care of yourself and your family. And Jess, you can do the next one.
Oh yeah. And that one just said like 7 out of 10 adults don't have any life insurance whatsoever. Like I said, there's different stages in our lives where where life insurance conversation is going to come up. If you're getting married or currently married, you should definitely have that conversation about life insurance. Even if you're single, a lot of single people, like I said, I'm single, I have a life insurance because I'm not always going to be young and I'm not always going to be healthy, right? But I still protect myself. So don't think just because you don't have children that you should not have life insurance. If you're about to have a baby, you should get life insurance. If you are purchasing a house, you should get life insurance. Even if you are selling your house or whatever the case may be, life insurance is always going to be a need that people are always going to need that conversation about, because we're reaching different stages. Like we shouldn't be 7 out of 10 people don't have life insurance, right? But yet all of us, most of us have jobs and we have people and different things. We need to now change that narrative and not shy away from from this tough conversation. The next slide. If anybody has any questions, we'll be here to answer them. Then the next one, it does have our contact information on it. These are our cell phone numbers, our emails. If you just want to reach out, we are offering complimentary consultations for anybody that would like that, just to have a talk, just to see, hey, am I on the right track? Look at my policy. So we're extending that to you to everyone that does reach out for this event right now. 2021 is here already, and let's go into 2021 with having our financial game plans in order, the right type of life insurance, making sure that we have those game plans. I appreciate all of you. Thank you guys so much.
Thank you too. I don't know if anyone has any questions, but we are available. There's no wrong questions to ask. We don't charge anyone. Everything is complimentary. It's custom and, and free. So, we want to thank everyone